There's going to be winners and losers, and the winners are going to be disproportionately companies that can handle this and their investors better than their competitors.
In Canada, some of the provinces have already put in place particular legislation, and at the federal level, well, things are in motion.
In fact, we are the 6th largest producer of electricity in the world, and we are 16th in terms of the contribution that wind makes to our electricity demand.
The social investment organization, the Canadian Association for Socially Responsible Investment, hosted the 2009 Conference on Socially Responsible Investment, SRI, in Winnipeg, Manitoba. The conference program included a panel titled Cleaning Up Our Carbon Footprint, Sustainable Options in Renewable and Non-renewable Energy. The panel was introduced by Rick Lewis of GWL Investment Management Limited.
Dr. Matthew Kiernan is currently co-head of the Sustainable Solutions Group at Risk Metrics. Duncan Burney is a manager with the advisory services practice of PricewaterhouseCoopers and leader of the Sustainable Business Services practice in Winnipeg. And last but not least, batting cleanup is Robert Horning. Robert is president of the Canadian Wind Energy Association, which represents the interests of more than 400 members in the industry.
Dr. Kiernan highlighted the role of corporations, the asset owners, and their investment in renewable energy.
In terms of climate change, hugely important set of actors in the drama are corporations, in particular large ones, point one. It's not a fringe peripheral issue anymore. It's really driving a fundamental restructuring of the global economy, the decarbonization of the world economy, if you like, and that winners and losers, like any other restructuring, whether it's electrification or the internet, there's going to be winners and losers, and the winners are going to be disproportionately companies that can handle this and their investors better than their competitors. While there's a ton of attention on carbon footprint, to us that's only a very small part of the story. That's the start of how you analyze how risky a company might or might not be. But you also need to look at how robust their risk management capabilities are, their ability to recognize some profit upside opportunities, to sort of deviate from the ExxonMobil model of the world that sees climate change as just an unmitigated black hole of downside risk with no opportunity attached to it, which I think is an increasingly obsolescent view. And you need to look at, not just take a snapshot, but look over time as well. We've also found that there's even more attention to disclosure than there is to focusing on what companies' carbon footprints look like. Disclosure is obviously, I think, an unquestioned good thing, but the work that we've done comparing the financial performance of great disclosures and mediocre disclosures doesn't show any difference. So disclosure it's necessary but not sufficient.
Dr. Kiernan also explored the difference between talk and action.
We see banks as being, their climate risk exposure is something that you really can't get at by reading press releases. We've taken a very old-fashioned view and thought that, the best global banks dealing with climate change are not the ones that write the prettiest press releases, but the ones who are actually investing in and lending to higher quality companies.
Duncan Burney opened up with an attention-getting assertion.
It takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently.
Mr. Burney's session took a careful look at government regulations and the work companies should be doing to move toward a carbon-neutral economy.
In a low-carbon economy, carbon emissions are and will increasingly be regulated. In Canada, some of the provinces have already put in place particular legislation, and at the federal level, well, things are in motion. In no particular order, some of the things that company can do are calculating their own carbon footprint, assess government policies, develop the data management systems, understand the cost associated to lowering their emissions, understand the cost associated with complying with other environmental requirements, understand the stakeholder expectations, assess the potential for carbon credits, and this may not be that one may not be applicable to everybody. Develop strategies to deal with all these new issues, and include a cost for carbon in the decision-making process. And I'll have to admit, given the uncertainty there is in the regulation, that might not be an easy one today.
Robert Hornung used the wind energy industry to highlight the potential to address 3 major challenges: energy, employment, and the economy. He focused on 4 major drivers.
Firstly, the need for a more environmentally sustainable electricity system. A desire to support rural economic development. It's an opportunity for new industrial development in the 21st century. There are now 400,000 people worldwide who work in the wind energy sector. And finally, the last one I put down is actually a desire to ensure cost-effective electricity production in the long term.
Mr. Hornung shared statistics about wind energy production as a percentage of overall energy production in a variety of European countries. Then, he turned his sights on Canada.
In fact, we are the 6th largest producer of electricity in the world, and we are 16th in terms of the contribution that wind makes to our electricity demand, which gives you a sense of the scope of the potential that exists in this sector in Canada. We actually expect, even with the current financial situation, that we will actually do better this year than last year in terms of new installed capacity. We will get over 3,000 megawatts by the end of the year. But if you look at the next bullet, that's the important one. There's already an additional 5,000 megawatts beyond that have been contracted to be built over the next few years. So we are on a definite growth path. Okay, provincial governments across the country have either put in place legislated requirements like renewable portfolio standards, or simply directed their crown utilities and said, we want you to get this much renewables or this much wind, go get it. If all of those things actually come to pass, we will end up with about 12,000 megawatts by 2015. There's going to be 1.75 million jobs created in the wind industry between now and 2020. That's a lot of jobs. Now, Canada is not going to be the biggest player in that. But what we think Canada could do is Canada could try and grow its share of that pie going forward, become a more important player over time. And we think that actually represents a tremendous opportunity. In the short term, the financial situation is a challenge for the wind industry, just like it is for everybody else. I said we're going to get over 600 megawatts installed this year. That's right. But if you'd asked me a year ago, I would have said we were going to have 1,000. Okay? It has had an impact. Finance is harder to get. It's more costly. And this is a very capital-intensive industry. 70% of the total cost of a wind energy project, from development through to taking it down at the end, 70% of the total cost is the cost of the turbine. There are a lot of challenges, but there's some good news too. We do have in Canada some examples of jurisdictions that are starting to think bigger about wind, starting to think, how can we take better advantage of this resource? In Ontario, waiting for royal assent right now is the Green Energy Act. Okay? This is a piece of legislation which is, quite frankly, really unparalleled in Canada in terms of what it's trying to do. Ontario has taken the view where they've said, we need to create new jobs, and we think green energy is a sector that can do that. And they are reworking, in essence, the whole energy system to try and do that. They're going to put in place feed-in tariffs, which are essentially a set price where if you're a wind developer or any other renewable energy developer, and you think you can build a project to that price and you're willing to do it, they'll say, great, we'll take it. They're even going to follow some European countries in putting in place a right to connect, which means if you want to build that wind facility or that solar facility and you can pass an economic test, they will connect you to the system to allow you to do that. They are going to streamline some permitting processes to try and avoid some of the duplication that exists right now. And they want to build a supply chain. It's great. They already had a target of 4,600 megawatts of wind by 2020, and now they threaten to actually go significantly beyond that. It's the first real example we see of thinking big.
The old saying is that crisis breeds opportunity. Never has this been more true than in the race to save the planet and its precious non-renewable resources. The energy industry has the opportunity to make a difference in cleaning up our carbon footprint. Duncan Burney continues.
Organizations today have a window of opportunity to put in place the necessary management and control systems that they undoubtedly will need when this regulation does get implemented. And when that time comes, the companies that have done so proactively will know exactly how to respond.
Matthew Kiernan closed with a quote.
One of my favorite quotes from John Holdren, who used to be a lowly professor at Harvard, but is now Mr. Obama's chief scientific advisor. Embedded in the challenge are both dangers and possibilities. Dangers, essentially, for those who make bad choices or no choices. and huge opportunities for those who try to grasp what the opportunity perspective is.
You've been listening to coverage of the 2009 Conference on Socially Responsible Investment, SRI, hosted by the social investment organization, the Canadian Association for Socially Responsible Investment, and sponsored by GWL Investment Management. This podcast is sponsored by PricewaterhouseCoopers.